Okay, so we will report on some more specific data once the reports come out from the real estate board. But for now, we're going to talk about the recent Canadian mortgage rule changes. So some big announcements were made recently. Music to anyone's ears with a uninsured mortgage. That is anyone that has put more than 20% down. This is a new change that's going to be coming up November 21st, where you will no longer have to be stress tested to switch to a new mortgage provider. For the last few years, owners with these mortgages were stuck with their lenders because they were not able to qualify with a new lender because of the stress test, therefore trapping them with their existing lender and not making the mortgage market very competitive. And so this is a new change. This change was available for insured mortgages for folks that had put less than 20% down, but now this is available to anybody with a mortgage as of November 21st. This is a big deal, especially for those of you that are coming up to your renewals. So make sure you reach out to your mortgage broker. The other big piece of news, as the insured mortgage price cap has increased from 1 million to 1.5 million. You may have seen some of my videos on this. This is also fantastic news. That means that if you have less than 20% down, you can buy a property up to 1.5 million. There's a certain ratio up to certain threshold levels, and you can save a significant amount of money up front, over $100,000, for example, by being able to put 7% down on a $1.5 million mortgage approximately. New insured mortgage refinancing product for adding secondary suites is coming up. That's something new that was recently announced. There's also extended amortizations for first-time homebuyers or any purchasers that are looking to buy pre-sale properties, being able to extend those amortizations up to 30 years. The math on this is pretty significant. So you have to take a look at this. If you're a first-time home buyer or purchasing new construction, it makes a lot of sense to consider these 30-year amortizations, which then make your monthly mortgage payment smaller and more affordable, which not only allows you to qualify for more mortgages and or a higher price point, but of course it makes it all more affordable. And of course, a new mortgage rule allowing homeowners to refinance at a lower rate without qualifying for a new mortgage, kind of coming back up to this OSFI elimination of the stress test. So this is all fantastic news for people thinking about getting into the market or existing mortgage holders. And we're going to take a look at what interest rates are doing right now, because there's been some interesting changes, and I have a public service announcement for anybody with a mortgage, especially if you've refinanced or purchased property in the last 6 months or have a mortgage rate of about 5.5% or more. We're going to look at that next, but just 1 second. Let's take a look at where rates are now, which will help you understand why you want to listen to that next segment. Okay, so in September, the 5-year government bond dropped down to 2.7%. Now, I know we always talk about the Bank of Canada and their interest rates and this interest rate announcement, because that impacts the variable interest rates for your variable mortgage products or your home line of credit. But the 5-year Canada bond impacts your fixed rates, which a lot of people have moved to because, quite frankly, they are cheaper than the variable rates right now. And there's some risks involved there, which you need to talk with your mortgage broker about, not your bank, but your broker. So you talk to more than one party and are able to see various products. But anyways, point being is the 5-year bond had dropped down to 2.7%. Now, fixed rate mortgages are slightly higher than this by a couple points, but it shows you can see that not too long ago, we were pretty high at 3.8%. Now, this was at the beginning of September. We've had a little bit of a bounce up here. You can see we've jumped up back to about 3%, partly because of what's happening in the Middle East, partly because there was a very strong jobs number release that came out from the US and just other factors. So there has been a little bit of tightening up in the bond market, but still much better than when we were even 6 months ago. Makes quite a significant difference. In fact, I'll just move myself here. It was just almost 4% 6 months ago. This is impacting rates, and let's see how far we've come. So fall of 2023, this time last year, borrowers were taking fixed rates at about 6% to 6.6. Variables were sitting at 6.7 to 7.2. Now, in the fall of 2024, you're looking at fixed rate mortgages, looking at options at about 4.19 to 4.89. What a significant difference. to just 6 months ago, and your variable rate option sitting at 5.35 to 5.75 approximately. These definitely change depending on your particular file, owner occupied rental, etc. But you can see that there has been a significant change. And of course, affordability is a big part of this low sales activity in our real estate market, and probably also concerns about the overall economy. Have definitely become more affordable. And here is my public service announcement. If we have not connected recently, I am trying to connect with all of my clients to let them know about this in case you can save money. Because of course, everyone refinances and renews at different times. I know who my buyers are, etc. But you never know what's going on in even if my buyers bought 4 years ago, they could be deciding to renew or have renewed recently. Is now the time to refinance? Look, if you have a fixed rate above 5.5% in the last 2 years, you should contact your mortgage broker. The reason why is there are still very high posted rates, which will lead to lower penalties for when you have to pay that penalty for breaking your mortgage. And even with breaking the mortgage in some of these circumstances, you have to do the math. In some of these circumstances, there is a significant savings, even if you just recently refinanced or purchased in the last 6 months. This is very important. You can roll in your penalties and secure rates in the mid fours. That's very possible. In some cases, I've heard of even 3.99%, but I mean, like it's like 1 in a million kind of thing. You can significantly reduce your monthly mortgage payments. I saw an example of over $800 a month savings. And in fact, actually like $1,400 a month savings. So this is a legitimate opportunity, but once the high posted rates start changing, the IRD or the interest rate differential, the penalties that are applied to refinancing or renewing these mortgages, the penalties will become too great and then it won't make any sense. So please, if this sounds like your situation, speak to your mortgage brokers so that you can save some money and have a better cash flow in your life, because people feel the pinch and or just want to improve their cash flow. And by the way, interest rate, you pay more principal with every mortgage payment. So you'll have a lower mortgage balance over time. And the point is that your bank is not going to call you. They are not going to tell you when these numbers make sense so that you break your existing mortgage and roll into a different one. Nada. So please, you can try your bank, but you could also talk to a mortgage broker who can speak to various lenders. They can speak to Scotia, they can speak to TD, etc. They can speak to credit unions. If this opportunity is for you, I highly recommend that you take advantage of it. Alrighty then, that's it for me. If you're looking for any specific information on the real estate market, please connect with me. Also, please make sure you like and subscribe on YouTube as well as on Instagram. And if you haven't already signed up for my email newsletter, because we do send out a lot of information via that route, and you'll be kept posted on information tidbits like this and more. With that, I'm Christine Kopr with Sotheby's Realty in Vancouver, BC, and I look forward to connecting with you. Have a great October.